definition is you have to have $200,000. I realize this does rule out a number of people. $200,000 per year single, or $300,000 joint, or you must have assets worth over $1 million excluding your primary home. But the good thing is, very recently, SEC has provided some new rules where if you really want to get into some of these deals, unfortunately, some of the best deals are available only to accredited investors. You can take something called the Series 65 exam, and you can become an accredited investor even if you don't qualify on the income on the assets. Again, my contact information is there. If you want to know more about it, send me an email. Yeah. So here are some of the top portfolio considerations you should look at when you're looking at building a portfolio. Again, I'm not talking about the mobile home park you want to buy or the next property you want to fix and flip. By all means do that. But when you do that, think where you want to be 3, 5, 10 years from now. It's think of it like a jigsaw puzzle. You're building the first piece of the puzzle. Nobody says, oh, I'm done. I've built one piece. I'm done with the jigsaw puzzle. Nobody does that, right? You want to build a portfolio which is diversified, right? So you want to look at the overall structure. You want to look at diversification. I'll talk about each one of these items. How do you select a deal, which is what Tyler was asking, and in the GP also. What is the cash flow? How do you maintain liquidity? And what are the overall tax benefits? I'll talk about each one of these items in a little more detail. So let's say that you want to allocate $200,000 to real estate. I realize different people have different amounts they want to allocate. You could do, $200,000 cash deals, or take some debt, 2 single family, or you could buy private REITs or funds at $50,000 each, or you could do 8 syndication deals at $25,000, or you could do $5,000 debt deals, $40,000 each. That's the math, right? I'm not doing anything profound here. You don't need a Harvard MBA for this. But the main point is you want to transition from which property to buy to how I build a portfolio that balances risk and returns. You don't want to be diversified. You don't want to be stuck in one market, right? So again, that goes back to diversification. You want to invest in multiple markets. Now you can say, oh boy, you need a lot of money to do that. Yes and no. If you want to buy complete houses in individual market, yes, but there are other ways you can invest, and some of the things I had mentioned earlier, right? So just like a stock portfolio, diversification is critical because, I'm giving an example here. Durham, North Carolina, Portland, Oregon, which is where I'm from, and Boston, they have completely different cycles, right? I don't need to tell you, each economy and each local market is different, right? So, and then when you're looking at a deal selection, again, I could spend a lot of time on this, but I'm just going to walk through at a high level. Obviously, you want to look at the property specifics, the debt servicing risk. Is there enough income generated from the property to service the debt? What is the risk of the renter? If it's a retail property, is this essential business, non-essential business, single renter, diversified renter base? And what is the risk of the borrower if you're doing debt deals? You do both, right, for debt deals, and it's a superset. And then the foreclosure flexibility. When you do debt deals, it's very important to do deals in states where you don't have a judicial process. If something goes wrong, you want to take possession of the property and get your money back. So you don't want to go through a long court process to evict the person, right? And then you have to look at the capital stack. That is the preferred equity. Again, it's a little beyond the scope of this to get into detail. The structure of the deal, which is what I was talking about, Tyler. How much is the investor getting and how much is the sponsor getting? And what's the track record of the sponsor? How many deals have they done? How many deals have they exited? And so these are all some of the things you have to research the deal thoroughly. Please don't go look at the advertised internal rate of return. You really have to look through the legal documents before you start investing in this. Yeah. So then you have to look at the overall cash flow, right? So when you purchase a rental property, you put some principal in, you take a loan, you get some monthly income. Hopefully your income is greater than your loan. And then eventually hopefully you sell the property and you get the appreciation. All right. Again, no rocket science here. In a debt deal, there are 2 types of deals. When you put some money in, you can get monthly interest regularly, or sometimes the debt deals pays the interest at the end of the debt. I'm not talking about 30-year mortgages. I'm talking about 6 months, 12 months, 18 months, fix and flip loans here, right? I'm assuming you don't want to get into the 30-year mortgage business. There are plenty of banks doing that. And then, in the equity deal, generally, there are 2 types of equity deals. There is value add properties where people take existing properties and spiff it up and you still get cash flow. or there is basically, what do you call it, new construction. In new construction, there is limited distributions in early years. Most of the distributions come in later years, but most of your money comes in when the property is sold. Typically, it's between 3 to 7 years, right? When I'm talking about these crowd syndication deals, yeah? So, and then you have to look at the liquidity of the overall portfolio, right? I mean, you can purchase the property and then until you, like I said, you haven't made money until you have made money. I mean, you can count all the paper gains, but that can vanish in a day. So until you have actually sold the property, you have not made the money, right? So in a broad portfolio, you want to have liquidity events at periodic intervals. I mean, all of us, you might think you don't need the money, but you never know, right? So you do want to structure your portfolio where you have some liquidity events at periodic intervals. When I say portfolio, I don't mean just buying houses. I told you there's REITs, private funds, there is debt. I mean, there's a variety of things you can do, yeah? So finally, tax implications. For debt instruments, you get something called a 1099 INT. Any money you make on debt investments is subject to regular income tax, yeah? Equity investments, you get something called a K1. That's a partnership thing. You can use TurboTax or whatever to use those K1s. And for private REITs, you get a 1099 div. The main advantage of a K1 is any long-term capital gains so far, with the new administration, I can't talk about it, is subject to long-term, lower income tax rates than short-term capital gains, yeah? So. And so you do have to take all of that into account. But remember one thing, when you do multiple crowdfunding deals, you get a separate K1 for each deal, and you cannot offset passive losses from one against passive gains in another. Something to be aware of, yeah? So I'm going to briefly talk about crowdfunding platforms. What is crowdfunding? Well, it's kind of what it sounds like, crowd and funding, right? So where people are doing fix and flip loans or something like that, and instead of putting $100,000 in one loan, there are some property loan, some platforms which you can put as little as $10, literally $10 in each loan. And so these are online marketplaces. It allows you to participate in larger projects like apartments and office buildings. Most of us cannot afford to do that on our own. I mean, some of you might, but I can't anyway. Large apartments or something like that. Passive investments, you can leave the complex projects to experts, and this allows you to build diversification across your portfolio. So, but be careful here. When you go to these crowdfunding platforms, you have to research it and do your due diligence, right? Because their interest is in raising money for the investors as fast as possible. Their interest is not aligned with making money for you. Definitely read all the agreements. Do not just go by advertised returns, and be aware that some of the deals may take longer. They may say 3 to 5 years, it may take longer. I mean, in real estate, you should always be prepared to have your money tied up a little longer if you have to, yeah? So here are some crowdfunding platform options. And by the way, if you do want to download this presentation, I'll give you a link. You can go download it. It's available on our website if you do want to see it offline. I realize I'm going fast. I do understand that. So in Home Union and roofstock.com, you can buy homes in other markets for rental purchase. You're buying whole houses, yeah? Or you can do private REITs and funds like in Fundrise and Realty Mogul. Especially if you're not an accredited investor, you can put as little as $2,500 in Fundrise. And this is one of the few platforms which is open for non-accredited investors. And Realty Mogul is where, or CrowdStreet is where you do complete syndication deals, yeah? Where you do equity deals in CrowdStreet and Equity Multiple. This is the equity deal I was talking about, right? Where you get a slice of an apartment or a slice of a self-storage. And then in debt deals, you can get that in Fund That Flip and Patch of Land. Let me add one more platform to this, groundfloor.com. This is the one where it's open to non-accredited investors, and you can invest as little as $10 per deal, and you get 8 to 12% returns, yeah? So I'm not recommending anything. I'm just giving you some different choices. So yeah, the link, I'll give you the link in a second. Yeah, I'll just give that at the end of the presentation, and I'll also put it in the chat window. Or I guess before I forget, let me just do it here. So if you go to the bottom of the screen, we do ask you to register to download the presentation, but I mean, you can always opt out whenever you want. And if you don't want to get any email, you can say, I don't want to get any email. At the bottom of the screen, avesterinc.com/overview, you can download the presentation. Yeah. So, and so here is the summary. You want to invest in real estate like stocks. You don't want to invest it one thing at a time. In a stock, you always have to look at the stock portfolio principles, where you are building a portfolio to diversify and reduce your risk. So private funds, equity, and debt deals provide a quick way to expand your portfolio. Structure your portfolio to meet your investment goals, and increase diversification to reduce local market risk. You don't want to put all your money in the rental property, which is just down the road from your primary house. I'm not saying don't do it, but I'm saying you can't just put everything there. Think of your cash flow needs, always consider taxes, build liquidity into any plan, and crowdfunding can really accelerate portfolio building, but be cautious. You have to read through the agreements and go a little bit at a time, yeah? So briefly, I just want to take 5 minutes, and I really want to open it up to questions. So Avester, I'm a co-founder of Avester. We have invested hundreds of thousands of dollars in developing the technology and the legal infrastructure for this. This allows investors to build custom real estate portfolios, which can be diversified across multiple properties, different time frames, and you can get passive income and capital appreciation, or a combination of both, yeah? So what we do, and we research and pre-invest in the best deals. Some of the best deals really go in 24 hours. I'm not making it up. The very best deals go in 24 hours. So we put our own money in these deals, and the partnership money. And then you come along and say, you know, I'm a very risk-averse investor. I want, and you tell us your goals. And then we help you diversify in multiple states and times. It's completely transparent. You can think of us like the Fidelity of real estate. And now I don't want to offend your stockbroker, or TD Ameritrade, or whatever you want, where you can log in, you can see every single investment, and then you can withdraw the money as it comes in, or you can reinvest. And all of this is packaged in a nice LP structure, so you get all the tax benefits of real estate. You can offset passive losses from one against passive gains in another. Yeah. So again, this is how it works. We research the deal, we pre-invest in the deal. The deals are cut into slices. And then you come along and set your overall direction. We allocate these slices to you, and then you get a pro rata share of the earnings and appreciation. You can withdraw the money as it comes, as it exits, or you can reinvest and reinvest the money. Yeah, that's kind of how it works. So let me give you a very quick 2-minute demo. I don't know if you can see this. But very briefly, this is kind of how it looks when you log in. You see the overall portfolio. This is the balance. This is the return on the deals which you have seen. You can invest in both debt deals and equity deals. And then there is this nice little map which shows you how you're diversified. You can click on anything you want to get more information about the deal you have invested in. And then this tells you all the deals which have exited and how much money you have made. This is kind of the liquidity graph. When you come along, you can say, hey, you know, I have a kid going to college in 2 years, or pick your favorite, why I need my money back in 2 years. Some of you look pretty young to have kids to go to college. So, and then we structure a portfolio. So this is not like a CD. You don't get your money back on June 28th, 2021. It's approximately, right? You get it approximately during this year. So he's getting $7,000 back in 2020, 7,000 in 2021. You generally get the idea, yeah? And then you can also have a detailed portfolio details page, which tells you very precisely how much you have invested in each investment. You don't have to put a lot. You're putting $500 in these debt deals. When you click on anything, let's say this is a Manhattan apartment, you're getting 9.5% return. And it shows you he's made $100. It shows you how much money you have got. And then these are some equity deals, right? For example, this is student housing, Morehouse School of Medicine. You're getting 18% IRR. The advantage of going through this platform is generally, if you go directly to the crowdfunding platforms, you have to put $25, $50, $100,000 per deal. Here for debt, you can put as little as $500 per deal. And basically equity, you can put as little as $2,500 per deal. So this, unfortunately, right now is open only to accredited investors, because the deals we invest in is open to accredited investors. But we are working on a public fund which might be open to non-accredited investors, but I can't give you a time frame yet. So thank you so much. Like I said, you can download the presentation from here. And let me I already gave my contact information. Now I can go back to any portion of the presentation. But my main message is, when you think of real estate, I'm not discouraging you to go to the first deal. By all means, go get your first deal. But when you start thinking of your second deal, do I really want to put my money in a house, or do I want to go for a fund? Do I want debt? There are a variety of instruments all there. It's not all fix and flip, right? By all means, do your fix and flip, but maybe you want some exposure to other states, other types of properties. Maybe you want exposure to self-storage. Maybe you want exposure to mobile homes, which some of you are already doing. And maybe you want exposure to apartment complexes. And you don't have to think I need hundreds of thousands of dollars to do that. There are ways you can do that without having to spend too much money. So you do need money. I can't tell you about, I know there are these real estate conferences where you can say, without any money, make money in real estate. I mean, I can't tell you how to do that. You can go to those conferences. So.
Well, thank you so much, Badri. I mean, I have a ton of questions, but let's go through these other ones first. So okay. Preston asks, what is the ownership structure of the slices? Is it held in a street name?
Yes. So all of this is in a LLC, and all the assets are held in the LLC. So regardless of what happens to avester, Preston, if you're interested, it's best to reach out to me. I don't want to bore everyone. Avester Inc. is a C corporation. But independent of that, each of these fund is an LLC. The assets are always in LLC, and that's why you get the benefits and the depreciation benefits. Yeah, I mean, I'm happy to walk you through it if you want more details. Just contact me.
No, that answered my question. Thank you.
Yeah.
I think. I'm sorry. Go ahead.
No, I just said thanks, Preston. Yeah.
Oh, okay, gotcha. Okay. I know Abdi was asking about Burlington. So if you guys know anything about Burlington, get with Abdi about that. A few questions I have for you, Abdi. What is there like a cycle to real estate? Is it like, first you would invest in multifamily. When multifamily is kind of on the downhill, do you invest in retail, self-storage, industrial? Is there a cycle?
Yeah, there are multiple cycles. There are experts who supposedly call the cycle, but then suddenly the cycle proves them wrong, right? So
right.
My philosophy in this is that's like trying to guess the stock market. I mean, I wish I could. I mean, trust me, it's not that I don't want to. I wish I could time the market and get in at the right time and get out at the right time. To me, it's much better to just invest in all asset classes, a little bit at a time. And then there are some golden rules. I mean, there's some basic rules, right? I mean, for example, if the stimulus deal does not go through, it's better to invest in new construction right now, because hopefully 2 years from now, COVID won't be as big a deal. I don't know, it might be, but I'm praying that it won't be. And 2 years from now, we'll have gone past that. Yeah. So it's better to invest a little bit in new construction, and you want to stay away from value add Class C properties right now. You know, there's Class A, Class B, and Class C. Class A is the better ones. So it's better to invest in new construction or Class A or Class B. Self-storage seems to do well in all cycles. I mean, because, and the reason is, you know, if your rent goes up from $1,000 to $1,100, you get really upset. But if your self-storage unit goes up from 70 to 77, I mean, you're not going to go running and screaming on the road, right? So
right.
You found that self-storage does well in all cycles. And then, you know, student housing, again, you want to invest in student housing in complex, in Ivy League schools and top schools, right? Because some of the mid-tier schools, it may go into more online. So as long as you invest in the right student housing, I'm giving a long-winded answer, but trying to time the cycle is very hard. So my opinion is build a diversified portfolio and forget it. So.
No, all that's really helpful. So how does avester decide what to invest in?
So that's a complex question. We have over 40 different variables we look at. We look at the track record of the sponsor. We look at how investor friendly the deal is. We look at the debt servicing risk. We look at, we put all this in a mathematical model. It's not like, do we like this person or something like that? And then based on those, I mean, again, if you can reach out to me, I'm happy to walk you through that mathematical model. And it's all analytical, and it's a model we have developed. My partner has invested millions of dollars in this thing, and we have developed this model over 10 years. So, and then once you score above a certain number of points, and the points are based on 40 different variables. So,
okay, gotcha. Is there a certain segment of the real estate market that you invest in, like multifamily or office space?
Everything. We stay away from mobile home parks. Now, I hate to say that because many of you seem to be interested in that. That's because we have a social justice assessment index too. So I'm not saying all mobile home parks are like that, but the operators we found tend to take advantage of the tenants, and we don't want to do that. So we look at some ethical considerations, and I'm not saying everybody is like that, so don't. So apart from that, we invest in a wide range of other things: self-storage, retail centers. Now, don't get worried about retail centers. We invest in retail centers with essential businesses like Lowe's, and trust me, Lowe's and Home Depot, they're doing fine.
Yeah, they're doing fine. They're doing great. How often, you showed us a little bit about your website. How often can you pull reports?
Anytime. I mean, when you log in, when you say reports, if you join avester, you mean, or
right.
Yeah. The platform is the login I showed you. You can log in anytime. You get instantaneous updates. As soon as anybody gives us money, we slice it and allocate it to the investors. It's 24/7.
Gotcha. And who actually manages the projects for avester?
So you remember, we go to other crowdfunding sites and syndicators. A lot of syndicators come and try to raise money from us. So we don't manage the properties. We always, we are the LP, and we are an LP still, and we slice it into smaller slices. So the properties are always managed by somebody else, right? I mean, we can take debt things, a fix and flipper might update the thing, and then, yeah. So.
Gotcha.
So Shailene is asking, how do you take the test to become? If you don't mind, Shailene, you can reach out to me, but the name of the test is called Series 65. Just Google Series 65. I put that in the chat window. And if you take that test, you can become an accredited investor. And if you want to reach out to me, we can recommend some resources. There are tons of free resources out there. But it's nice to get, if you pay $100 or $150, you can get some tutorials, you know. But there are free resources too. If you feel like, I mean, it's something I would highly recommend. I mean, you learn a lot from that, taking that exam. I know all of you are busy. You don't have time for exams. But if you're not an accredited investor, that opens up a lot of new possibilities. Yeah. So it's a nice thing which SEC did. This just happened 2 months back, 2-3 months back. Before that, you had to have the assets or the income to qualify as an accredited investor. So.
Gotcha. Very good. Do you guys have any other questions for Badri?
One request I do have, if you'd like me to reach out to any of you, please type in your contact information. We won't be bugging you or anything, but if you want to hear a little more about avester, I'm happy to reach out. Yeah. So, or you can send it to me privately, whatever you prefer.
Very good. Let me see if I have anything else.
A couple of other things I wanted to mention is, if you want to save the chat window, maybe, you know, Tyler already told you, if you click on the chat window and there are 3 dots, you can save the chat window if you want my contact information or somebody else's contact information, you know, so, yeah.
Right. And also, just so you know, we have a YouTube page, so we post all of our meetings on there. So if anybody's looking for that information, we can get that to you. Or if you want to email the board, we can get you Badri's information too. All right. Any other questions?
So, I mean, I'm happy to go back in this. So, yeah.
Melford, yeah, go ahead.
Yeah, I wanted to know, for avester, is it a site for people who are unaccredited, or you should be accredited before you take part in avester?
Unfortunately, right now, Right now, it is open only to accredited investors. We are working on a model where we can open it to non-accredited investors. So yeah, what I encourage you to do is look at some of these other sites. If you're non-accredited, I'm not recommending this. I mean, all the legal disclaimers apply. You may want to look at it and evaluate it. You can look at fundrise.com. Again, that's fundrise.com. That is open to non-accredited investors. It's like a private REIT. Or you can look at groundfloor.com. Those are two options. Unfortunately, avester right now is open only to accredited investors. So, and
Okay, thank you.
Jeffrey was asking, is series65.com? I think it is. I mean, there is, if you just Google Series 65, there are various websites. I'm not familiar with series65.com. I think that is the website. I mean, that's where it tells you information about how to take the test, what is covered. Just type in Series 65 in Google, you'll find a bunch of information.
All right.
So let me ask you a question. Do people here invest in, I know some of you do fix and flips. Do any of you invest in any of these options, like REITs or equity deals? Has anybody done any of these deals? Storage, okay, I see. Got it. Okay, okay. Storage is a good way to do. A small multifamily, Deneen says, very good, very good. And sorry, while I'm waiting for others to respond, somebody asked me again, can you recap what accredited is? Let me just do that quickly. So if you look at line item number 5, you have to have $200,000 of income for the last 2 years if you're single, or $300,000 joint income if you're per year if you're a joint, or you need to have assets which is worth over $1 million. And it's not enough if you just say you do, you have to actually prove it, unfortunately. And that should not include your primary home. I don't know if I answered your question. If you have more questions, but the new addition to is that you can take the Series 65 exam. Actually, you can take some other exams too, but we recommend the Series 65. The other exams are a little more complex. So I'm not saying Series 65 is easy. So Shailene asked, is that income gross or paid taxes on? It's a total income. It's not just what you pay on taxes. It's your total income, not just the taxable income. I feel this is very unfortunate, but then the SEC does not consult my opinion. So, I mean, I think it's limiting some very attractive opportunities to non-accredited investors. And they are trying to relax it. And that's the first step is, okay, people who can take the exam, you can do it kind of a thing. Yeah. So, and they are looking at other ways of relaxing the requirements. So.
I have a question.
Uh-huh.
If you took the exam, will people know that you're an accredited investor by exam, or are they just going to see you as an accredited investor?
No, one of the, say, for example, for avester, we work with a third-party company who proves accreditation. And now with the exam, all you have to do is send your exam passing certificate, and they'll give you a certificate saying you're an accredited investor. So,
are you treated differently with exam compared to having the income and assets?
No. Excellent question. So, there is no difference. I mean, once you're accredited, you're accredited. It doesn't matter how you are accredited. I mean, which path you took. All paths are the same once you finish it. So, it's a little beyond the scope of this thing. What type of things do you cover? There are a variety of things which covers in the exam. Sorry, I would again encourage you to just Google it. I mean, Wikipedia has a ton of information on Series 65. I would rather not get into what all are covered in the exam. Yeah. So, or reach out to me. I'm happy to answer it. Yeah. I don't want to necessarily take up everybody's time right here. So.
Oh, looks like we have a couple more minutes. Any other questions before we let him go? Great question so far.
This might be a weird question, but Do you know of anyone personally who had capital under 50,000 actually go on to become a successful real estate investor?
I do. Frankly, not very directly or personally, but I've been going to a lot of meetup groups. People have, there you go. Shailene said that. Let me speak up on Shailene. Shailene said she invested a lot more less than that, and she is definitely successful. And there are lots of people who have a lot less than that. And fix and flips might be a good way to go there, where you're putting some sweat equity. And absolutely, I know of people who have even $5,000 or $10,000 and have gone on to become very successful real estate investors. The only point I want to make is there's not one single way of doing it. There are multiple ways of doing it. A lot easier if you have more money to start with. Okay, you don't need me to tell you that.
So now we can ask Shailene for money since she has it now, right?
Wow, that's great, Shailene. Shailene said that, I don't know if you saw the chat window. She started with 100K.
I don't have money. That 100,000 is in the debt that I started with. But I would call myself successful in real estate at this point.
I would agree. I think you are. Absolutely.
Yeah, that gives me hope. I'm trying my best to raise capital and get stuff like that, but I just wanted to see if anyone could do it with just a small amount of capital.
Oh man, the REIA is full of those people, Melford. Especially whenever we can get together and network in person, man, you'll run into those people all the time. Go ahead, Preston.
Yeah, I was going to say, I'm a real estate attorney on the side, and you can do this from anywhere. I've helped people do deals from jail. As long as you can find a good deal, you can make the money, and it just snowballs from there.
Yeah. If anybody's heard of the BRRRR method, it's a great way to start with a small investment and then grow it to, it could be anything. You can grow it exponentially. So if you haven't checked that out, check out BRRRR, or BRRRR. I think there's 4 R's in there, but it's buy, rehab, rent, refinance, repeat, and that's something that Bigger Pockets has coined.
Yeah, Bigger Pockets. I'm sure all of you are familiar with Bigger Pockets. Have you had anybody from Bigger Pockets talk in this lunch and learn? No.
I don't think so. No, not yet. We'd love to have somebody. We'll see if we can get Brandon Turner or.
Yeah, there you go.
Yeah, get one of those guys on here. Shailene, you're on that, right? Yeah, Shailene says not yet. Great idea.
I haven't reached out to ask them to speak. I was looking through some Bigger Pockets videos that maybe we would play here, and then I wasn't sure if playing a video would be as much value.
Yeah, that's a good idea. All right, cool. Well, I see it's 1:30. I want to be respectful of everybody's time, but like Badri said, if you want to save the chat, click on that button at the bottom right-hand screen or right hand of the chat box, and the first option will be save chat. So you can save everybody's contact information that they put in there, and then review back to it later.
The last thing I wanted to mention is you don't have to reach out to me only for avester. If you want to clarify, I'm happy to clarify anything which I've said. I know I did rush through it. So if you have any further questions, you want to talk about the Series 65, just email me. Email is better initially, but then I'm happy to chat too later. So.
Gotcha. Great. Thank you so much. And Badri, thank you so much for doing this today. I really appreciate it.
Thank you for the opportunity. I appreciate it. So.
Absolutely. Well, I want everybody to have a great day. We'll see you again here, same time, same place next Tuesday. So thanks, everyone.
Hey, thank you, everyone. I appreciate it. Take care.
I have a question.